Hello, everyone. Thank you for joining today our live sessions with Robert Beefus. Welcome, and I hope you're gonna enjoy the interview that we have today. Quick, before I start, I always like to thank the moderators of the group. Robert is one of them, obviously. There's Jeanette, there's Chris, there's Lance, and so four moderators, and I'm the admin. And so far, so good. Thank you guys very much for all the work. I know there's a lot of people that we have to filter out. We sometimes miss one or two, and then but we're pretty fast on resolving that issue if ever we missed one. And I just want to say thank you for all your work and for all your dedication to this group. It's really, really well appreciated. The success of this group is because of you guys. Now I want to put all the attention to Robert Beefus. He's I don't think he needs a presentation or an introduction, but Robert, what I really, really like about Robert is his posts, well thought. He puts a lot of work in it. There's also some reporting that he has that he wants to share with everybody, and it just generates a whole bunch of comments, likes, and people really love what you do, Robert. And I think having you here tonight is going to help us, get to know you better, and learn more about you and about options trading. So thank you for joining.
Oh, you bet, Sam. Thanks so much, and I love the group. Thank you for starting it and for how well you administer the group. I haven't had a chance to talk in person with the other moderators, but of course, interact with them online, and they do a great job. So it's just a really, really good group, and enjoy being a part of it. I'm not a part of many groups just because it takes a lot of time if you're really going to answer people, and it takes a commitment. And so this is one of only two groups that I'm active in, but I really love it.
Great. We're going to talk about these groups a little bit later in the interview, but first things first, the same question that I asked to everybody. Tell us a little bit about yourself. People want to know who's Robert Beefus and how did you get started in options? Like, how did it all begin?
Well, I'm not sure they want to know all of that, but we'll start with a little bit of information. First, I think kind of a general overarching trading worldview that I have. In fact, I have a note. It's posted here in a couple places. It's too small to see to put up, but it's a comment from a first century author named James. James was writing to a community in the first century where apparently they had some successful business people, and they were maybe a little arrogant in their approach to doing business. And he reminded them of this. Let me just give you, it's real short. He says, "You say that today or tomorrow we will trade and make a profit. Yet you do not know what tomorrow will bring. You are a mist that appears for a little while and then vanishes." So folks, that's my approach. I'm always aware that I am a mist that is going to vanish in a very, very short time. And what happens in this world is not really about me. It's how can you make a positive difference in the world, and in whatever it is that you love. And I came late to the trading game, but it just turned out to be something that I really enjoy. And even as much as I enjoy trading, I just really get a big kick out of interacting with people who have questions about it. And if there's any way that I can ever help anyone, I'm happy to do that. So
you did already.
Just remember, we're missed. We have no idea what that trade is going to do tomorrow. So you asked kind of how I got started. I've seen a number of stories that are not too dissimilar from mine, but I came out of a real, that's not a tragic situation, but kind of a, for most people it'd be a pretty major negative life event. I've always been in business. I've never worked for anyone in my life. I started a business. My first business I started when I was 25 years old, and that was an utter disaster. by the way, absolute disaster. And that's because no one ever told me that my goal should not be to start a business, it should be to start a profitable business. See, I didn't understand that part of it, but tried again shortly thereafter in October of that year, 1982, and built a business over a number of years. And it did fairly well for a long period of time, so much so that we started a very aggressive plan in the early 2000s. We started a very, very aggressive growth plan of buying businesses, and we had just gotten started on that, and it was actually going pretty well. I mean, as companies go, it was just a tiny little company, but we had about 60 employees and about 13 million in sales. Tiny little company still, but we had big dreams. And then 2008 came around. So the first thing that happened in kind of the crash of 2008 and 2009 was that we were doing business with a bank. In fact, I know you're in Canada, Sam. This was the U.S. part of a Canadian bank that, and unbeknownst to us, the U.S. operation was doing very, very poorly, and this bank wanted to dump it. And so in that time period, 2008, 2009, 2010, they decided that they did not want to renew our line of credit. We had never missed a payment. I mean, I'd met all of our requirements, but as they tried to clean up the U.S. operations, our business no longer made sense to them. We were a service business without a whole lot of assets. So they wouldn't renew our line of credit. And in that environment, if any of you remember, credit was almost impossible to get, almost impossible to get. So long story short, we could not replace about a $1.2 million line of credit. And so without ever having missed a payment ever, they put us into default. So our loans were cross-collateralized. So that means that a default in one created a default in other loans that never had, again, never missed a payment. We could show them where the cash flow was coming from. Our customers were big pharma companies and solid companies. But we just fell into this black box where they were just checking boxes down along the way, and we could not get that replaced, and ended up having to put that whole holding company into bankruptcy. So this was a major life event. Never had been through anything like that. Then along with that, we had entrusted an investor with all of our savings. Now, those of you who are young and in business, I'll tell you one huge. There are several mistakes, many mistakes we made, but one of the mistakes I personally made was I reinvested every penny back into the business. I didn't pull a lot of money out and get it going everywhere. Every penny went back to buy companies, to reinvest. So I found myself at 55 thinking that this organization that we built would, there would be an exit strategy and a lot of ways to go through it. But that exit strategy disappeared completely in a relatively short period of time. And then in the crash of 2008, 2009, the investor who we entrusted with what we had, which is a very small amount of money, we had $300,000 invested with him, and he lost over 30% of that. So now we've lost the business, or we have kind of for being 55 years old, we were not in what I considered to be the best shape. Now we had a lot to be thankful for, even at that point. But I had to decide, well, what am I going to do now? And I don't want to trust other folks and just kind of let other people do it and tell me what they're going to do. So I started learning about investing. Went through a lot of Motley Fool stuff. Decided that, hey, I can't wait to just invest in stocks. I need to find something that's a lot more active that I can generate income. And so I started looking at options. And options were such a big black box of confusion to me. I mean, at that point, I had no clue what an option was, but spent many, many months going through every online free program I could get to learn and figure out what options were. After about 4 or 5 months of reading everything I could, buying books and going through, I subscribed to Option Alpha, followed their trading for a while. And Kurt, really taught me just by following his trades for a while, really kind of the ins and outs of not only trading but management of options. But I wasn't happy with the return ultimately that they were generating. And so a number of years ago, kind of went out on my own, started doing earnings trades. We did earnings trades for several years, exclusively earnings trades, and did really, really, really well doing that. And then in my IRA, started doing wheels, started doing cash secured puts in 2020, and that went really well. And so the beginning of 2021, I thought that maybe we would just kind of tone back a little bit of the earnings trading and to something that I perceived as a little bit more less risk involved, and started doing more active wheel trading. And that's when I got involved with this group, and really got active in this group the very end of last year and the beginning of this year. And it has been so much fun. I'm telling you, learning the wheel trades, learning from everyone in the group, reading their posts, seeing what they're trading has just been a blast. And we're in a position where, hey, I'm not saying that we're immensely wealthy, but we have been able to restore so much of what was lost, and we're now in a position where we're in pretty decent shape as I approach those retirement years.
Well, congratulations. I'm happy it kind of worked out for you. I honestly believe that everything in life happens for a reason, and you know, maybe that was your path to get there and now to have success. So well deserved. You know, I love hearing stories like that. I was under the impression that you're, and we'll talk about it now. I wanted to talk about it at the end of the interview, but I was under the impression that your earnings group, you did earnings before doing like the wheel and other options.
Yeah, exclusively earnings trades. Yeah, and it wasn't that other group, by the way. It's not my group. I just joined another group. But yeah, we did earnings for many years. In fact, we had several accounts that we did them in. One of them was absolutely exclusively earnings, and we did that for 17 months to test some strategies and also to train to get my sons involved and help them learn about options trading. So.
That's awesome. And earnings, I presume, is it the only reason why? Because of the premiums are higher, or there's other reasons behind that?
There's a lot of reasons why I have been and still am attracted to earnings trades. The model and the strategy that we went with, and I'd be happy to post the document. I have a pretty detailed document if folks are interested. But the model that we pursued was selling calls or puts, usually naked, but sometimes spreads at 3 p.m., 3 to 3:30. The day before earnings announcements. So if they're announcing after close, we're picking up on those companies, and then the ones that are announcing just the next morning. And then we close the position usually by 10 the next morning. 10, 11, if everything goes right, we're out of that position. I have this philosophy. There's really not, I can't prove it. It's just my it's something that I'm fairly confident in, even though I haven't done any kind of statistical or scientific analysis of it. And that is that regardless of what's going on in the broader economy or the market, the major factor that determines what happens to a stock on earnings announcement day is that earnings announcement. So even in markets where the market is down tremendously, like last year early in the pandemic, and there have been other periods that have been down tremendously, on the day of earnings announcement, that announcement overwhelms anything else that's going on in the market. And so that actually provides a lot of predictability to earnings trades. And I like that we were in and out of them. Most weekends we went home all cash. Wow. And one thing I don't like about the wheel is that right now I have more stock positions than I actually really like. But I love that about the earnings. You're in it, you're out. If you have something that moves against you, you may have to manage it for a while, but that was pretty rare. That was pretty rare. And usually we'd take a loss of up to 3 times premium maximum if we had to, but that was very rare also.
That's really good. And do you play premiums when you expect good earnings, or you also play options when you expect bad earnings?
It's really not based on any prediction of what's going to happen. It's purely based on past performance, historical performance of the stock during an earnings announcement.
Oh,
so a lot of people at the time were using implied move. I see a lot of people today use applied move. Implied move, in my opinion, is a worthless number. It's an arbitrary number that means nothing relative to an individual stock at earnings announcement. But what is meaningful is what has the stock done actually over the last 2 years after an earnings announcement. If it goes up, how much does it go up? If it goes down, how much does it go down? So what we would do is we would look at a company, we would look at the 9 quarters of history, and then we would say, well, it goes up or down this amount, and we would try to double that percentage in our strike. And if we could double it and earn really good premiums, what that means is that that stock would have to move twice what it has ever moved, at least in the last 2 years, 9 quarters, in order for it to hit our strike, and that's either up or down. And so anyway, it was kind of a different way of looking at earnings trades, but it worked really well. And you know, I don't know if this would have continued. We closed the account for a lot of reasons, but we opened an account we started with $20,000. We put a little bit more in there. We had a total of $60,000 that we put into the account. We traded only earnings 4 days a week. We never did trades on Friday, so we would be all cash on Friday. In 17 months, we took that $60,000 and we closed it out for $210,000 in 17 months. So it was a really, really good trading strategy. But you know, any strategy is good until it's not anymore. Yeah. It stops working. And at the beginning of this year, we had some that took a lot more work to get out of, and I just wasn't sure that it was working right then. And so I just really wanted to find something that was maybe a little safer, a little less risk. But we still are interested in doing some earnings trades.
That's very cool. Very, very good. Okay, so in terms of selling puts or even sometimes maybe covered call, walk us a little bit through your process of, you know, do you like selling puts on a weekly basis? I'm the type of guy who likes a longer term, 45 days approximately. Do you like weekly? Do you like longer? What strike price? How do you choose that, etc.? Like, walk us through a little bit of how you go through that and how do you analyze all that to kind of take a decision on what to do.
Yeah. So first, just a reminder. I mean, I think that there's a lot of folks in this group who know a lot more about this than I do. So this is just what is in the process of being developed and refined in my thinking about Wheel. Wheel it's actually tougher because there's really a lot more variables. I'm just going to compare it to our earnings trades. It was more scientific in the sense that I could look, and if I couldn't meet these numbers, there was no trade. It was really obvious and clear. Wheel is not like that. It's the hardest part is finding the right companies, and you know, that you want to trade, and then figuring out, you know, what strike, and then when you want to get in. So I just have preferred to go shorter time frames. I like shorter time frames, Sam, because there's just a lot more opportunities to adjust and manage. And I find that, you know, I'm not the kind of wheeler that says, okay, I'm going to sell these cash secured puts, and whatever happens happens. If those puts get assigned, boom, that's fine. I'm gonna take that assignment and start selling covered calls. I actually don't like the covered call side of it. I do it, and I've got a number that I'm doing it on right now, but it's not, I don't find it fun or comfortable. I love the cash secured side, so I the put side. So I tend to roll, and if you're doing weeklies, you can be a lot more kind of flexible on rolling. You can take a more granular approach to your rolling and have a lot more options. So that's the only reason why I do weeklies. You know, I also have always done weeklies. So maybe it's just a preference based on what I've done over time. What I do, go ahead, were you about to ask something?
No, I was going to say, okay, that's awesome. So we got the weekly part. Let's talk about maybe the strike price. I think we were going to go here.
Well, maybe what about the hardest part, which is the company? You know, where are you going to start wheeling? Okay, that to me is one of the real challenges. And people are always asking, what is your trade? What's your company list? What's your list of possible wheel companies? And when I first started this in January and saw that folks were kind of keeping track. People had said keep track of 50 companies or 75 companies or something like that. I started to do that with a pretty extensive spreadsheet tracking a lot of stuff, and it was just an enormous amount of work. And I said, well, I'm not really interested in working this hard and keeping up that spreadsheet. So I started focusing first on just companies that I really love, companies I do business with and really love. So, I love Amazon, I love Shop, I love Apple. I'd be happy to own Apple stock just about any time, at any price almost. I just really enjoy these companies. And so there's a small group, Microsoft, companies that a lot of them are tech, but I like Chipotle. I've loved Chipotle ever since they just dropped so terribly in the past when they had the bad lettuce or whatever it was, and the way that they've come back. It's just a pretty incredible company. So I look at those companies first, but that becomes kind of a small group of options, a small group of companies, and so you need to expand it. So the next thing I do is I scan a lot of resources. I belong to a lot of newsletters. I get a lot of great ideas from this group that people are posting. But what I do, let me show you something real quick. I'm experimenting with something. I can't really recommend this yet. I'm going to share my screen if that's okay.
Absolutely, that's what we love.
Okay, so this is something that I'm experimenting with, and I can't show you the actual software, unfortunately, because it's on another computer. But this is a frame from that computer. It's a software called Roadmap. It's kind of pricey. I'm not 100% sure what I think about it yet, but it has a whole lot of really interesting scans that you can do. And here I'm scanning a lot of stock. This is one of my wheel scans, and it scans a lot of companies throughout the day. And what I'm looking for here, it shows you, automatically right in front of you without having to go look at all this stuff. Month open, last price, the weekly high for the week that you're in, the 5-day high, the 5-day low. And what I'm looking for are these 4 greens. And if I wanted to take a short position, you could look at the 4 reds. But for a wheel where I'm really looking for something in an uptrend, I'm looking at companies that have like a 4 greens here. And so there's all kinds of things in this software. Way too much to go into on this thing, but it's an interesting tool, and I'm exploring it. So if I find one of these 4 greens in my group of companies that I'm looking for, then I can open that in another chart, and I can look at it automatically based on settings. Kind of gives me a buy zone and even a target, although the target on a wheel is not necessarily as important. But it kind of shows me, I look at where is this stock relative to this buy zone here. And then that kind of then leads me into other tools. But that's kind of where I'm starting to look and explore a little bit. From there, I go and do a number of different things, and I think these are all things. None of it is rocket science. I'll just hop over one more area here and show. I'll take that stock, and I'll go to my go-tos are things like I'll go to Seeking Alpha, and Seeking Alpha I also have a whole big list of possible wheel stocks that I'm looking at, and I like Seeking Alpha because I can set up the portfolios and look at them on my phone very easily. I can look at the ones, here's the wheels that I'm currently have positions in right now for the wheel, but I track those. And what I'm looking for is, let's say we were looking for Coop, let's say, well, Mara, we can look at Mara, because Mara was, I can't remember which one I was looking at over there, but let's look at the Coop. And what I'm looking for here is I'm looking for what the authors, I don't have time to research these companies. I don't have time to do in-depth information. So what I'm looking for is what Wall Street analysts are thinking about this, what the Seeking Alpha authors are looking at. And I go through this. I spend a good amount of time reading about each of these companies, trying to understand what their model is, what the bullish thesis is. One thing is that with these Seeking Alpha authors, you can look here. I always pay attention down here to how many people follow these guys, or men or women. And so I don't really want to put a lot of weight into something that has like 50 or 100 followers, but here this Gary Alexander has 20,000 followers, and so I'll put a little bit more weight as I look through and read through what his thinking is. So I'll follow that and look at the Seeking Alpha. I'll look at bar chart, and if I look at Coop, I want to see their technical opinion. I don't really want to learn in-depth technical stuff. So I just go to bar chart, I look at their opinion. I'm not really as fixed here. This doesn't have to be a big buy. I actually like it when something is moving in the right direction, like here. You can see last month, 100% sell. Now they're up to a 24% sell. I like it when they're moving in the right direction. I pay attention to the trader's cheat sheet and look and say, well, is there a strike that has some support? And so I'll do that. And I'll also look at, I've been using a lot lately of TradeView's charting. I've found that this is really, really helpful. I'm using the Heikin Ashi candlesticks. The Heikin Ashi kind of takes a lot of the noise. It smooths out the trend a lot. And so I'm also looking for these up arrows and down arrows. This isn't Coop, by the way. This is Cardano. But if we take a look and just see what Coop is doing right now, you can see that it's in a pretty decent uptrend. When I see something like this and it's kind of in an uptrend here, I might use some Fibonacci tools to try to guess, kind of where this might turn around. But that's kind of maybe a little beyond what we're talking today. So those are all things that I'm looking at to figure out, is this a stock that I want to get into, and do I want to get into it now? Okay, so that's kind of the company story, right? Looking at all those things, but it can be done really, really fast. If I see a stock, someone posts on a stock that they like, I can pretty quickly go through that process if it's not a stock that I'm familiar with, and make a decision reasonably fast. Now that doesn't get to strike yet.
Yeah.
So strike is the strike is I don't have really hard rules. Generally, it's between 20 and 30 delta, but it just depends on how I feel about that company. If I'm just a firm believer in that company, I may go closer to the money. And because I'm okay being assigned or rolling even a closer to the money position, because you're gonna get a lot more premium rolling a closer to the money position if you have to. And so I may go closer, but if it's something that I do stocks that I'm not. I think this is a good stock. I'm not sure I really want to own it. I think it's a good short-term play, and I might go closer to the 20-25 delta.
Interesting.
So nothing rocket science. I think probably very similar to what other people are doing out there.
Well, I'm wondering, because you said it doesn't take that much time, but I'm wondering, like, do you have like a specific schedule? Like on Monday morning, you kind of do all your analysis, and then you say, I'm going to go in this, and that, and then you let it go for the week. You do whatever you need to do, and then Thursday, Friday, you start looking at maybe what positions you need to roll or what are going to expire. Like, is there like a schedule like that you kind of go through, or are you on your computer all day, 8 hours a day, and look at options?
No, I've got a real job, so I have to work my job. But that's actually changing now, and it's funny. I've really wanted to develop a strategy document, but the wheel to me so far has not been conducive to developing a really clear strategy, because there are so many variables, or maybe because I'm still trying to refine the process. Here's an example. I have been looking, my basic setup was looking on Thursday or Friday and selling for the following week's expiration, the following Friday expiration. So that was my standard. But then there's so many variables, because I don't let a trade go. If I'm hitting a 50% profit or more, in a day or two or three, I mean, I'm going to take that profit and then readjust, you know, and say, does this still make sense? Are there better options out there? So then you find yourself with cash to put to work on Tuesday or Wednesday, you know, and so that's what I have been doing. I don't know for sure, but I'm experimenting with shorter trades, shorter weekly trades, meaning looking at what happens on Monday and then going in for Tuesday through Friday and trying to be out by Friday if possible. So I'm exploring that, but my bread and butter has been the Thursday to next Friday trade. I really like that. Everyone knows that the market it's in a state that's hard to predict. I mean, you can't sit here and try to predict the big drop. You can't listen to everything that everyone is saying, but you can pay attention to the general state and prepare. And so I'm trying to clean up the account, trying to get out of stock positions if I can, have shorter trades, and so I'm just kind of making some adjustments now. Not worried. I'm not thinking that tomorrow everything's gonna crash and we're gonna have, you know, a huge big you know, devastating drop. It could happen. Who knows? But I'm just trading what's in front of me every single day. But I am trying to be conscious of what could happen and get my account as cleaned up as possible and have as much as, this is the way to put it, I think I want to have as many options as possible if something went down. So
as much cash as possible in your account, just to kind of be ready to reinvest when it goes down into.
Yeah, cash. I have a few hedge positions in things like the VIX, and I will be putting. I'm watching some of the other indexes, the DIA. I will definitely be putting a hedge position on DIA. I've been watching it, and a lot of folks put a position on a while ago, and I just didn't think we were quite ready. But the price of those are just very simple spreads. You know, buying put spreads down around, for the DIA, probably down around 300, 295 area, and buying a chunk of those just to have in the account should things take a turn down, and probably do one in most of the major indexes.
Very interesting. All right. We talked about your earnings as well. I don't know if you want to add anything about there, but we kind of touched this a little bit. But your favorite option strategy. So I'm guessing it's selling a put. And I'm thinking that's a lot of people's favorite. There's just sell a put, hope that it's gonna expire worthless, and then move on to the next put. But
I love the cash secured put. You know, I love the cash secured put because if you love the company, especially, you know, I even if it drops, and I posted examples on Palantir, that Amazon trade where it dropped tremendously. Palantir was down 30% almost the entire time that I had that trade, and ended up with almost a 50% annualized rate of return on that trade that I posted. That's why I love it. And you don't have to worry about it. I don't worry about it anyway. I do have a margin account, and I do trade some puts on margin also, and that's a little bit of a different story when you're working with margin in that account. But the cash secured put is definitely my favorite position. I still love the earnings and do earnings trades. I've been exploring with what I call wheel into earnings. So what the wheel into earnings is, and actually the wheel into earnings, I've done about, I think maybe 10 or 12 of those. All of them but one has been profitable. The one that I'm working on now is Roku. I did a wheel into earnings on Roku. Roku kind of took a dive there. But this is the idea here, is that you meet the wheel criteria, company that you like. Secondly, a company that has a history of going up into earnings, of rising into earnings. And what I do is I look for at least 3 out of the last 4 quarters. rising into earnings. Another member here has pulled some Earnings Whisperer numbers, and we kind of use some of their ratings to look at that. But then selling a put about a week before earnings, as it rises, the stock price increase generally has been overwhelming theta loss and volatility increase, and generate some nice profits. And like I said, we just have been experimenting with it, but it's worked so far except for Roku. I have to now manage 5 Roku contracts for a while, apparently. So that's one that is very interesting. And the other thing is I've been experimenting for the first time with selling ratio back spreads before earnings. Very interesting. So
never heard of that one. That's a bit complicated.
Pardon me?
That looks complicated to me. Never heard about that one. You want to explain it quickly to the group what it is, or?
Yeah, a ratio back spread is a lot simpler than it sounds. Although managing it, if it goes against you, is a little
more complicated.
Onerous. Ratio back spread, all it means is you're buying puts at one strike, and you're selling twice as many puts. Well, it depends on the ratio. I'm doing 2-to-1 ratio. Some people do 3-to-1, but I'm doing 2-to-1. So you're buying, let's say, 10 puts at a certain strike, and then you're selling 20 puts at a strike further down. So you just set it up so that you're getting a net credit. That's the key.
The idea.
So you're actually buying those 10 puts, but you're getting a net credit. And you have some downside protection, and you have no upside risk. Okay, so I did 2 of these. I did 2 of these last week. One of them worked perfectly. The other one was Chewy. Now, see, I tie these strategies together. I love Chewy. Would I be upset about owning Chewy stock? No, I wouldn't be upset about owning Chewy. I have huge orders for our 2 Australian Shepherds with Chewy every month. I love the company. Okay, but with Chewy, they took a drop, and the reason I did this back spread is because so many companies have had great earnings and do take a drop this
right.
earnings season for some reason, and so I wanted a little protection. And so Chewy took a big drop. I sold the puts for a nice profit, and then I sold the long puts for a nice profit on the drop. I kept the short puts and rolled them to next week to see if we can get back there, because they're below that strike price. So I've got to manage that side of it. But it's just an interesting trade that I'm very attracted to that, and we'll see what happens.
That's interesting. What's the spread between the 2 strikes?
It depends. It depends on the strike prices, because it's generally going to be a pretty narrow spread, because you have to get enough for the shorts to pay and generate a credit for the longs, right? So it's usually, it's usually 1 or 2 strikes below the strike that you're buying.
Okay. And you're hoping, so what do you do if you right in between?
That's your maximum profit zone. Okay. That's the sweet spot. Okay. So, yeah, right in between those strikes, or even, if the reason that you do it, if you think a stock might go down, is because you're going to get a nice boost if the stock goes down, as long as it doesn't breach your shorts,
right?
And you're going to get a nice profit there. If it goes up, you've got no downside, because you're just going to collect the premium that you
and that's it.
that you were paid, and so it's just a very interesting trade. I don't post those things in Wheel, because it's not a Wheel trade. But if anyone's interested, I'd be happy to post the results and how it was managed and whatever. But
for sure, there's somebody that already asked for that document that you talked about before about the earning trades. Feel free to put it in on the Wheel strategy if people are interested. I mean, the goal of the option Wheel strategy is for people to learn more, and so like I said before, I don't mind if we talk about different stuff, as long as everybody learns and it's beneficial for all of them.
I'll do it. I'll put it up there, and you're gonna have fun with it.
Awesome.
It's not for novice traders. Let me just say that it is not for novices, because if something does move against you, it can move against you hard, and you cannot panic. you have to have a clear plan of how you're going to handle it if it moves against you. So make sure that you're ready if you're going to play with those kind of strategies.
Due diligence, yes. All right, now I want to talk about some posts that you did in the past that really touched me. One in particular that you ended up last year. You had a good year. You had some profits. I think you also got your boys, your two sons. I don't know if you have more, but you mentioned two sons in the past that you also got them into doing options and all that stuff. And you guys took your profits. You guys were happy, but a certain part of your profits you gave it to charity, and that really touched me, to be honest with you. I think it's a great idea. So can you share that story a little bit with everybody? And I think it's great to share, and it was a good thing that you did.
Oh. Yeah, that was a lot of fun. Just because of my own personal worldview and faith background, donating 10% of income, both income salary and income from trades and profit, is just part of my worldview. But this was a little different because the whole purpose, I explained earlier kind of the traumatic way that I came to trading, which and I came to it so late that I started thinking, what if I had done this when I see people trading in their 20s and 30s. What if I had done this? It would have been so much fun. So I decided to get all four of my boys. I have 4 adult sons. I'm privileged enough to have 2 of them working in the company with me. But I said, let's do this together so that you guys can learn trading. And you'll see in the strategy document that was set up to manage those trades, kind of how we're going to do those trades. You write in there as part of the strategy was that 10% of all profits is going to be given, and we started out doing primarily youth programs, but each year we took the profits for that year and took 10% of it and donated it to a program that did youth programs in Europe, and we did a number of different things. But last year was really fun because we were trying to figure out what we were going to do. We had a really good year, and I just ran across a story of a woman who just was struggling. She was an immigrant with 3 kids and was just struggling a bit, and I mentioned it. I didn't really, push them at all. I just mentioned this story. So, I just heard about this woman, and all these guys, just 4 of them, just instantly say, forget any tax benefit. There's no tax benefit to doing this at all. Let's just give it to them. So I didn't know a whole lot about their situation, but I knew people that were connected to them, and so we gave them a certified check for a big chunk of money, and we later found out that their situation was really kind of desperate at that time, and so it was just a real blessing to us, probably more than them, but we were just really happy to be able to do that. Now we did end up closing that account this year, just because we thought it had fulfilled its purpose of training, and so we're not doing that account anymore. But my wife and I do that in all of our income, all of our accounts every year. So
that's great. That's really good. It really touched me. And if that story could touch other people in the group, I know that we have people that are successful and all that stuff. Yeah, I think that's a good idea because and even just share the knowledge to some people that could help them to maybe get out of those situations. Sometimes that could also be something good. So anyways, it really touched me, and thank you for sharing that. It was for me, it was a wow moment in my head, so that's awesome.
Great to have the opportunity to do it.
Let me ask you quickly about your sons. Are they as good as you for trading, and do they have different views, different strategy, since they're a bit younger and they know more, maybe more stuff out there? Tell me more about that.
Yes, well, they're all really smart guys, and 2 of them are in a position to do a fair amount of trading, and 2 of them are not quite at that position, but they've really taken to it. My oldest son Um, he kind of took a different approach after he really learned it. Well, first of all, he ended up developing. He would take our trades and ended up with a whole group of people he would text them to. So he had a really large group of people who were taking those trades, and then some of them were taking a little bit riskier positions on them than we were doing, and they just made. I mean, he kept track of how much they made. They made millions on those things, and he took a different approach and started buying position rather than selling premium, which is what I've always done. And I don't know how to buy. I'm trying to learn, but he started buying calls and puts. He made so much money on GameStop.
Oh wow!
He won't tell us how much he made, but he had kind of set him up for a long time on GameStop. But he's had some other incredible successes. He's got a group of people following his trades now. And he's just done really, really well on Apple. Spotify, made a fortune on Spotify, but not selling premium. He kind of has developed a knack for buying, calls and puts at the right time. So he's done great. My other son is a CPA with Deloitte & Touche and has also become quite active in trading. The other two are, one of them is starting with a wheel on a very small account. So the question of, can you do wheel on a small account? And I said, yes, you can do it on a small account. And so he has started, and we talk, every other week about his wheel positions and whether he's going to roll or what he's going to do. And so that's been a lot of fun. So besides the trading, besides the learning, any interaction like that with your kids as adults is a blast. I mean, I just absolutely love it. I love that I get to be involved with their lives and help them. And so there's many benefits besides the trading. Just an awful lot of fun.
So are you the one who taught all that stuff to them, and you guys learned together and were looking at strategies together? So you kind of knew what you were doing, like, hey, this is working out for me. Why don't you guys start it?
No, I had developed it and actually had been doing that earning strategy for at least a year and a half before I had the idea to get with them and say, hey, let's do an account together and I'll teach you. So yeah,
awesome. That's great. And they love it? Are they passionate about it?
One of them is absolutely passionate about it. I think they're all at different levels of passion, but I'd say above zero.
Beautiful.
And one of them's an engineer. One of them's an engineer, and really, doesn't have the ability on a day-to-day basis to really track trades yet. But he will.
The story you just shared about your oldest son made me think of a book that I just finished reading called Laughing at Wall Street.
Laughing at Wall Street.
Yeah, it's a guy that I think he started with $20,000 and he went all the way to $2 million, I think, in 3 years.
Yeah.
And it was like that with buying calls and stuff like that. But interesting read. Whether you guys want to read, it's pretty interesting.
If you can learn it to buy at the right time, pick the direction. You can do way better than selling premium.
Sell the premiums, yeah.
But I've never been great at that, so I'll sell the premium day in and day out and collect a few $1,000s a week.
Another post that I want to talk about that touched me as well is I guess I could have looked for it, but I don't remember how you posted it, but it was something around, why are you what are you wheeling for? And you mentioned that you were able to purchase land for you and your wife. I don't know if it was a cabin that you guys wanted to buy and all that stuff. So that the wheel got you there. And I think I'm like, I like that. I like that thinking. Like, we're all doing this for a reason. And yeah, so tell me more a bit about that. Not I don't want to get into your personal life, but more about, is that really when you wheel or when you trade, you have already I'm trading for this specific, that's my goal, or tell us more about that.
Well, I haven't been trading that way. It was kind of the point of that post was that for years and years, the only tangible result of my trading was an increase in the accounts balance, right? A number. It was a number on Thinkorswim, up at the tiny little number at the top, you know. That was the only tangible result. In fact, and I think I even referred to this in this post, it's really funny. I don't think my wife really believed that I was building these accounts, and she even at one point when I was telling her some of the results we were having, she was convinced I was doing something illegal. And you know, but yeah, every all the trading and month after month, it's just the number. So the point of that post was that finally I had the opportunity to translate some of that real revenue out into my real life, where it became more than just the number. Now I don't actually. Yeah, the thing that drives me is not the money. I love everything about the process of trading. I love the interaction with people. I just really love all of it. Of course, we did have a situation where we had to address some shortfalls in a potential retirement. So there were real needs that we had to do, that we had to meet and work towards. But we ended up, we had a goal for several years to buy and build in the mountains of North Carolina. And so for several years, we've been looking out there, and finally we found a couple acres in a beautiful area that we loved. And you know, rather than you could have taken out a loan or something and paid it off over time, but instead of doing that, we took trading cash, trading revenue and profits, and took it out and paid cash for the land. And it just was a tangible, I don't know, it just was a different thing that I'd never done before. We've just built accounts, and it was just kind of a fun thing. That's all.
And did you felt good about it, or you felt, maybe I could have made more money with this money, and then paid the
Yeah, well, I have to admit that I felt good about it, but I did have that thought. Yeah, I guess that's. But I think it's good to make it tangible and real sometimes, and that was what a fun thing. And now we're about 2 weeks from putting our house on the market. You know, it's just my wife and I and 2 dogs, so we're gonna scale down our house and then begin building out there. So it'll be a lot of fun.
Congratulations! Congratulations! These stories for me are gold, and people like you deserve that. So all the best. Thank you very much for sharing that. That's pretty much it for me. Anything that you want to have or you want to share with we're very popular out there. So anything you want to share while you're talking, I can take a quick look at Facebook to see if there's anybody that wants to ask additional questions. But anything that you want to share to the group.
Well, I just commend this whole group. I love this wheel group. I just love that, you know, for the most part, the interactions are respectful. You know, it's always a challenge on social media, but I just really love the way people interact. I think that there's so many people that really enjoy helping other folks, and so I love being a part of it. I just hope that you all, you know, keep those posts coming, keep those ideas flowing. You know, help each other as much as you possibly can. Be nice, be kind to each other. Realize that, you know, not everyone thinks and trades exactly the way you do, but you can always learn. There's always something to learn from other people in the group. I certainly have, and expect to continue learning. So really enjoy it. Thanks again, Sam, for all that you do to keep the group going, and look forward to many more trades and posts and learning from you all.
Awesome. Well, we all learned a lot from you, and I want to say thank you again, not only for posting all of that, but for being a great moderator. Everybody I think we're a great team. I sometimes wake up early in the morning and I see that you guys already tackled some activities and you guys accepted some members. I'm like, wow, these guys are on top of it. So thank you very much. Thank you for the interview. Thank you for taking the time and for sharing all that passion and all that generosity that you have. Really, really appreciate it, Robert.
Thanks, Sam. Thanks, everybody. Have a great night and a great Labor Day.
Bye-bye, everybody. Thank you for joining.